Well, let's get straight into it here. I mean, activity, as we were saying on Friday, really slowing down on the NSE. What's your outlook for the week ahead?
I think there's a small bias higher, particularly because I think Safaricom has a bias to now turn around and move a little bit higher. The pullback looks complete. But I think, as you said, activity is set to be quite light as we get into the Christmas period.
If we take a look at it, I mean, you say with Safaricom specifically, we're starting to see that pullback complete. Is this now the time, should this be seen as a re-entry level on the buy side for those who have been sitting on the sidelines?
I very much think so. It's been in a steep uptrend from a 255. We hit 510. We saw some profit taking back down to here. But again, we're seeing demand about 2 to 1 versus supply. And on a forward PE of 12.5 with this new super growth curve in data, where they've had some astonishing numbers, I think, it looks at extremely good value. They remain the elephant in the room in the mobile space. They have a very clear view on data, which I really think is the next growth curve. And I think it looks good value here on all dynamics.
Well, talking about growth curves that are certainly getting recognition, I mean, Kenya Airways certainly stands in the spotlight in that regard. We were saying on Friday that the franchise really boasts this attractive force, and it's to a large extent on the basis that fuel hedges are set to roll off in the new year. And I mean, I was reading one of your reports, Aly-Khan, saying that fuel is naturally a material input for an airline enterprise. So let's take a look at the operational leverage that's now afforded.
Well, it's a hugely leveraged operation because all the planes are leased. The biggest input into this operation is fuel. I think it's between 30 to 40%. They were paying about 50% higher than the current market price for fuel, and that has been the case for the last 18 months. Those come off at the end of the year in early January. And I've followed this counter for many, many years. And the last time you saw an absolutely huge gain was in 2005. And it smells and looks exactly like that time. And if you can imagine, it's very dynamic for the bottom line. So and investors are pre-positioning ahead of this moment. I can see a price of around 74, 75 in reasonably short order, and I think the penny drops at the next round of earnings, which will be the half year.
Well, it certainly all seems very positive, Aly-Khan. Are there any concerns around KQ moving forward?
Well, I think we've seen a slowdown in terms of passenger load factors, but bear in mind that the cost base of such an airline in Africa is much lower. And if you care to fly around Africa, you'll be astonished at the prices that you're charged on a per kilometer basis. I think there are issues related to the transition. Titus has been in there for many, many years. I'm not sure what his personal ambitions are. But overall, I think this business is poised really to surprise to the upside.
Equitu Bank, another counter. I mean, it's traded in the 13.50 to 14 range for a while now. It trades on a forward of 11.89 and looks poised to report full-year earnings of between 15 and 20%. Medium-term horizon investors feel that it is a growth stock moving forward. That's hence attractive. What's your view on this counter and the potential for earnings moving forward?
Well, I think what you saw with Equitu Bank was a very hyper growth curve for the last few years, increases of about 100% year on year. And then this came to a shuddering halt mid-year when they actually reported a negative earnings report. And now you're seeing that curve again inflect. I think there'll be plus 15 to plus 20% at the end of the year. And I think what has happened to the stock is you've had the growth premium priced right out of it at a P of 11.89, ahead of a curve that's going to be plus 20 and probably plus 40, 45 in next year. It looks very, very attractive. And they're highly correlated, Alishia, to GDP because of the sheer number of accounts they have. And to me, we've had a slowdown for the last 2 years. They've played tremendous defense, and one senses they're moving to offense now. So it looks very attractive, especially when you compare it to the other big cap stocks, which are trading on an equivalent PE.